Hi there and welcome to ET Now. I'm Ashwin Mohan and you're watching Amicus Curiae. This weekend we're going to analyze some of the key decisions taken by the GST Council meet in Hyderabad and what it means for India Inc. and of course the roadmap ahead as far as the rollout of this ambitious tax reform is concerned. And joining us to throw more light on this subject is indirect tax expert Shrikant Kamat. He's a partner at BDO India. Shrikant, thanks for taking out time and welcome to the show. What kind of a boost do you think, Shrikant, some of the decisions from the GST Council meet in Hyderabad gave to India Inc. in terms of the transition? Let's start off with that.
I think the biggest positive out of this meeting was that now the GST Council is also settling down, and in terms of once now the formulation of the provisions are more or less quite clear. Now the Council is gradually moving to the stage 2 of implementation of GST across the country, and this stage 2 concerns with addressing teething issues on the GSTN portal, the IT setup, and considering the representations coming in from various industries and industry sectors. So we are seeing a reflection of all this in the council meeting, and I think now going forward in all the subsequent council meetings, I think we are going to witness more and more of this. And I mean, thankfully now there is a clear inclination of the council to address industry-wide issues. And hopefully, I mean, representations which have been going back and forth will now get considered more seriously and will be addressed. That is what I think, that is the clear indication coming from the council's announcements over the last weekend.
Shrikant, what's your take with regards to the decision taken as far as auto cess is concerned? There are multiple categories. What's been the reaction with regards to the proposed decisions by the GST Council in this regard?
Yeah. So if you consider the reactions, I think industry was more or less, I mean, ambivalent to the announcements, because in fact, while there is not any euphoria as such in terms of that the hike has not been on the expected lines, in that in fact it has been slightly to that extent a little low key, or rather it is not as much as expected. So the industry had more or less factored this kind of a hike, because any which ways there was a talk about some imbalance created initially. And I think if we also go by the reactions, they are in a position to absorb that rate hike and pass on a little bit to the consumer or the customer, end customer. So the demand of cars right up to the mid segment should not get affected, although the luxury car makers are still not happy about it, and rightly so. So to that extent, I think it's on expected lines. There are not too many misgivings about the cess hike, if I can just summarize it.
Shrikant, if you look at the rationale followed as far as the auto cess is concerned, it's very clear. The more expensive the vehicle, the higher the cess. Internationally, in indirect taxes, is the same principle applied as well?
No, I mean, we have always, I don't know, we have not really ever, in my, I mean, experience, we have not really tried to look at the luxury car segment in a positive way thus far, whichever government has been in power. So always the luxury car makers have been made to pay far more than probably what they could be paying in more developed markets. So, and I think under GST also, it is more to do with that being a luxury segment than really whether they are really doing any kind of a, I mean, is there any kind of a more damage to the environment, or is there any kind of a adverse outcome because of someone buying a luxury car? I don't really think so. It's honestly, it's not a level playing field in terms of imposition of cess, but then I mean, government has its own reasons for imposing cess. And probably I think the only logic that goes is that people who buy the luxury cars can afford a few lakh rupees more to pay by way of additional cess, and that is why they should be charging the additional cess. Apart from that, I don't really see some reasoning to justify such a steep cess on luxury cars or probably the high-end cars.
Right. Now that we are done with the auto sector, Shrikant, what do you make of the other key decision that was taken at the GST Council? And that was, of course, an extension in the filing timelines of the various GST categories. How much of a boost is that to the various sections of India Inc.? And what does this also have to say about the IT preparedness of the government?
No, I think for any government it could have been a challenge, and I mean a challenge of it has been a huge challenge to set up the whole GSTN, in fact the infrastructure, the IT backbone, and the government has done a commendable job. Only issue is, obviously there are bound to be teething issues, and government is trying to sort out those, but at the same time it is trying to address issues which are putting the trade to inconvenience. So they have just tried to push the deadlines, so they are also not really pushing hard on the timelines. So I think we have to understand and appreciate, and I mean give the government also enough time to settle down in terms of the IT backbone. So I think these are very nominal challenges of putting into place such a huge infrastructure. So I don't really see that as a concern, but I think the larger concern is more for the exporter community. In fact, that is the one which government needs to look at more seriously than the IT related and pushing of the deadlines. I think those were on expected lines. In any which ways, it was not realistic for anybody to expect the GSTN portal to go live from day one, that is 1st of July, or I mean even as early as September. So I think October 31st, what they have set the final deadline for the July return, I think seems very reasonable.
Shrikant, now since the GST regime has been rolled out, there have been lingering concerns around the GSTN network. What are some of the teething issues around the GSTN network that the government needs to immediately address?
No, a large number of error messages keep coming many a times. I mean, a few of my clients have even come up to me and told me that they have made the payment of tax, but it is not showing on the portal. So they have had to even make a payment for the second time for the same transaction or for the same month. So these challenges are definitely there, and I mean those who are facing these challenges might not agree with me because they are the ones who are actually paying out of their pockets. So I'm sure they are finding it more painful. But having said that, I mean looking at the overall scenario, these teething issues are not so much of a challenge. I think they should get addressed in a month or so, and I'm sure the credits, if at all they are required to be given, will also be given in the course of next couple of months in terms of if tax has been paid and if it is not showing, or if some error messages are being captured. I think those things will get sorted out in the next couple of months. So as far as the GSTN functioning or not, or it is going to be a challenge, I don't really see that as a challenge, and eventually things should fall in place latest by 1st of January. That is my reading of things.
Now Shrikant, in the run up to the rollout of GST, there was always a lot of friction between the centre and the various states, because the centre had its own set of limitations and the states had their own list of demands, in some cases exclusive to some of them. What are some of the steps that can be taken to ensure a smoother transition as far as the centre state dynamics is concerned? I know it's been a few months since we have rolled it out, but going ahead, what can be done to further improve the atmosphere as far as centre-state relationship is concerned on GST?
Yeah, I think at this moment and till now, the priority was to address issues which are more on a pan-India basis rather than for individual states. So to that extent, the GST Council, I believe, was more concerned with getting a general consensus, developing a general consensus in the council meet and address issues which are common for most of the majority of the states, so that the council can have a unanimous view on any point or any issue. But now I think going forward, individual states will be more vocal and want to address the issues which are specific to a particular state. So I think now a little more pushing and showing will be witnessed in terms of getting certain policy announcements, or in terms of rates, or in terms of procedure. We are now going to see more state specific issues getting addressed in the future council meetings. So I think the real challenge for the coordination between center and states will come now in phase 2, if we may say so.
Shrikant, there are also certain states that are repeatedly seeking a revision in the rate slabs as far as at least the top slab of 28% is concerned, and this is of course the rates for goods and services. What do you make of this demand?
So I think initially the whole approach of putting many goods and many services in the 28% bracket was more because of the concern aired by each state that they might end up losing revenue. But now I think states have the benefit of the reported collections over the past month or so, and now I think those fears or those apprehensions about loss of revenue are gradually receding. So I think even states are now willing to come to terms with reduction in rates, and I think that is why we are seeing more and more of these announcements where states are agreeing to remove certain goods, move certain goods from the highest tax slab of 28% to either 18% or 12% or even as low as 5%, what we have seen in the latest council meeting announcements. So a large number of items have been pushed either into 12% or 5%. So I think states have now, I think we are now gradually maturing into a phase where I think states are also, that is why if you see a couple of days back, our Honorable Finance Minister has even stated in a press conference that eventually the council is looking at only a 2 slab structure. So maybe we can have 18% and a 5% kind of a rate. So I think it's a great this sign of maturity of the council.
Right, it's time now to slip into a short break. Keep watching Amicus Curiae. We'll catch you on the other side. Welcome back to Amicus Curiae, where we are discussing some of the major decisions taken by the last GST Council meet in Hyderabad, and of course the road ahead as far as the transition to GST is concerned. Joining me on the show, of course, is Shrikant. And Shrikant, now let's talk about the Anti-Profiteering Authority. Now, if you look at the Anti-Profiteering Authority, Shrikant, the Anti-Profiteering Authority has to monitor the pricing behavior of various businesses under the GST. As an indirect tax advisor, what are your main expectations from this authority?
Yeah. So I think the Anti-Profiteering Authority and the concerns around how the authority will function and eventually whether it will have a lot of teeth and whether it will bite or not, I think will fade away if more or less the government is assured of revenue and the government has I think transparent data to suggest that most of the companies and most of the sectors have demonstrated price reduction post GST. While the Anti-Profiteering Authority and the machinery around it will be available if there is any kind of a suspicion of not passing on the price, but I think that is more just a deterrent measure. I don't really see that as an authority which will come to haunt the traders or haunt the industry. This is just a deterrent measure, and eventually it will fade out because in any case the anti-profiteering clause is only for the first initial year. After that, anti-profiteering has no meaning because GST will be in place. So it is only for the transition period, and that is why I think the fears largely will all be unfounded.
Shrikant, like I said earlier, GST has been around for a few months, but from a sectoral impact point of view, which are some of the sectors that have had the maximum impact on them in terms of the manner of doing business post the rollout of GST? Give us your thoughts on that.
Yeah. So I think the works contract industry, or rather if we call it the infrastructure or companies or businesses associated with real estate or works contract, I think there is a lot of impact of GST on this sector. Consumer goods, definitely there is an impact because price reduction has to get clearly demonstrated and it has to be passed on, and then the supply chain has to be completely remodeled. So I think consumer goods, the infrastructure and real estate, these are certain industries, pharma for that matter, again being a consumer goods as well as at the back end, but that is in terms of the goods are concerned. And in terms of the services, I am sure, I mean, we have seen a lot of the banking and the financial services fraternity also, insurance, really trying to restructure their entire, if we can call it a supply chain, to ensure that virtually all the offices or all the locations are equally affected, and there is no adverse impact on either the HO or any particular location. So I think there are a few sectors which are clearly more impacted than others.
Shrikant, we've always sort of spoken about GST in correlation to GDP. You know, if GST is ushered in, then that could add a few percentage points to the GDP. Do you think GST has led to an increase in manufacturing since its rollout?
See, basically the whole impact or the whole purpose of GST is a, I mean, ultimately it is a consumption tax, and obviously the whole purpose of introducing GST in India is that the consumption of goods and services has to go up. Eventually it should put more money in the pocket of the common man. And with whatever model that we have implemented today, GST is bound to put more money in the common man's pocket, and if there is more money in your pocket, you are bound to spend more on goods and services, and that is how the GDP of the country is going to increase, and that is how there is going to be more demand generated in the economy. So I think while it always looked good in theory, but now I think the data that we are getting clearly shows that there is a uptick in the demand as far as goods and services are concerned. So I think GST is already showing positive signs for the Indian economy.
Shrikant, you know, I have to bring this up because there's one community that's been constantly complaining since GST has been rolled out, and that is of course the export community, because they feel that they are bearing an unreasonable amount of financial burden because of certain unfriendly provisions. Give us a sense of what is the difficulty being faced by the export players, and what changes can the government make to make the transition smoother for them?
Yeah, certainly. In fact, I think exporters have been worst affected because of their cash flows and their working capital requirements going up many notches up, in fact. And there is a lot of discontentment in the exporter community in India today. I think that is one community which is clearly not happy with GST. It is not because of GST getting implemented, but because certain provisions have been imposed on the exporter community. More so the service exporters, I would say, are really at a loss to understand procedural compulsions or requirements of I mean, furnishing a bank guarantee and a letter of undertaking and all. I think this is completely unwarranted and was never there in the earlier regime. So I don't think a new tax, I mean a tax in a new form, the same tax in a new form or something like that, should have a new, completely altogether new and onerous requirement of documentation and procedure on the exporters, because I think exporters are a community in every country that require to be nurtured and in fact need to be taken well care of. And if that is not happening, it is really going to impact our foreign exchange earnings on an immediate basis. And that is what we are witnessing. In fact, exporter community, in the hope that certain policy announcements are going to be forthcoming, they have already held back their exports. They have already deferred their exports by a couple of months, which means that the data that is coming from the from our offices clearly shows that exports have gone down, which means the foreign exchange collections have gone down. And what are we talking about? End of the day, I think our economy will thrive only if the export is going to multiply. And we need to address this issue on a soonest basis immediately. So I think the documentation and the procedural requirements have to be relaxed on an immediate basis for the exporters under the GST law. And I am sure, I think in the last GST Council meeting, if you see the announcement, there is already a committee appointed under the leadership of the Revenue Secretary for addressing the exporters' woes. So that is getting addressed, and I am sure the government will come out with the announcements within a week or two. And we already are expecting the foreign trade policy as well. So I think the timing can coincide more or less at the same time. Exporters could be in for some good news from the government or from the council.
Shrikant, one last question before I let you go, and that is, of course, there seems to be, at least in certain sections of the trade, some confusion regarding the GST Council statement on tax, and this is of course tax on branded food items. Is there any need for a clarification, and are there any grey areas regarding tax on branded food items?
I don't really see any grey area, because I think the grey area has been probably created by vested interests. If you see, the government is very clear in terms of its announcements as well as in terms of the notification. So it always said that any food items which are which are under a brand or which are sold under a brand or a trade name and put in unit containers will attract 5%, and the generic items will be at a nil rate. So immediately people went and started deregistering their brands and this. So apparently with these kind of and some people interpreted it as that it is going to be only trade names or brand names registered under a particular law and not under the Copyright Act or something like that. So I think now the government has clarified that if you had a brand registered up to 15th of May 2017, you may have subsequently deregistered that brand, or if you have a brand registered under the Copyright Act, you are still, or if the brand is registered outside the country, in all three cases you will still be liable to charge or pay a GST of 5% on the food article or food item that you are going to sell. So I think in a unit container. So that is all that government has done, all that government has clarified. So as far as I am concerned, I don't really see any ambiguity, but I think the news reports suggest that there is a lot of chaos, lot of confusion in the market. So I think confusion could be more in the minds of those who want to still somehow try to take the benefit in terms of, so people are saying that there is one theory which says that if you put a manufacturer's name, the government can still consider it as brand name and come after you and demand 5%. But I don't think that is the intention of the government when they are saying that branded food articles. We are clear about what is a branded food article and when the manufacturer's name is put on the container. So if it is purely name of the manufacturer, I don't think anybody can consider it as a brand. You always know that where that is getting manufactured or where that is getting processed. Unlike a brand, so I think we are very brand conscious and we are a mature economy in that sense that we know what is a branded food article vis-a-vis an unbranded one. So I don't see any controversy, and the legislation or the guidelines are also very clear.
Shrikant, Kamat, pleasure having you on the show, and thanks so much for sharing your incisive thoughts on the key decisions from the GST Council meet, and of course the all-important roadmap to the goods and services tax, which is in motion. There are a few hiccups, but as we're all aware, the government is aware of what it needs to do based on feedback from the industry, and one just hopes that the transition becomes even more smoother in the coming days. With that, it's a wrap on this edition of Amicus Curiae. Thanks so much for tuning in. This is Ashwin, Mohan signing off. See you next week.